And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ right here in Lagos. Let's get the top stories that set your agenda now. See, the central bank says it'll begin to sanction commercial banks in the country over rejection of check-related transactions with effect from November the 1st. In a circular release, the financial market regulator explained that the move is intended to reduce the increase in the rejection of magnetic ink character recognition line. However, the CBN rejects and directs the banks to reach out to their personalizers to revalidate the MICR code line details for correctness in accordance with the Nigeria check standards and the latest version of the check printers accreditation scheme. Meanwhile, the CBN has warned deposit money banks, check printers, and personalizers over the surge in substandard MICR lines in their checks. Let's get a check on the oil market now. See, oil prices surged today as tension escalated in the Middle East after hundreds were killed in a blast at a Gaza hospital, sparking concerns about potential oil supply disruptions from the region. Brent crude futures advanced $1.75, about 2% to $91.65 a barrel, while U.S. WTI crude futures were up $1.91, almost $2, about 2.2% at $88.57 a barrel. In earlier trade, both benchmarks gained more than $2 to touch their highest levels in 2 weeks. And to the grain markets now, Chicago soybean futures gained more ground today, climbing to a 3-week high as strong demand in the U.S. domestic market underpinned prices. Wheat rose for the first time in 3 sessions on bargain buying, although ample supplies from the Black Sea region limited the gains. The most active soybean contract on the Chicago Board of Trade was up 0.9% at $13.08 for 3/4 of a bushel, after rising earlier in the session to $13.09 for 3/4 of a bushel. That's the highest since September 27. Wheat WV1 gained 1.4% at $5.78 for 1/4 of a bushel, and corn CV1 rose 0.8% to $4.93 a bushel. Industry data released on Monday showed monthly U.S. soybean crush at its highest ever level for September, and at the end of month saw stocks of their lowest in nearly 9 years. For wheat, rising export from Russia, the world's biggest shipper, continue to weigh on prices. And 15 million vulnerable households will receive 75,000 naira over the next 3 months under the federal government's Conditional Cash Transfer Program. This was disclosed at the launch of the Renewed Hope Conditional Transfer in Abuja by the President, who was represented by the Secretary to the Government of the Federation, Senator George Akume. The event coincided with the World Poverty Eradication Day, where the President says his administration is determined to take millions of Nigerians out of poverty. Our State House correspondent, Emperor Simon, reports.
Matching words with action, the Secretary to the Government of the Federation, Senator George Akume, and other government officials are at the press gallery of the Presidential Villa for the flag-off of the Conditional Cash Transfer Program, which coincides with the commemoration of the International Day for the Eradication of Poverty. According to the National Bureau of Statistics report, over 133 million Nigerians were multidimensionally poor in 2022, and with the removal of fuel subsidy taking a toll on the livelihood of the citizens, the cash transfer program is expected to provide over 60 million of the citizens with some relief for 3 months, as explained by the Minister of Humanitarian Affairs and Poverty Alleviation.
15 million households will be receiving 75,000 naira over a space of 3 months. This equates to about 61 million Nigerians directly benefiting from the conditional cash transfer.
The immediate past administration had a similar program which attracted mixed feelings, largely for alleged lack of accountability in the implementation process. However, the present administration is promising to do things differently.
The audit trail is there. The mechanism that is going to be used is one that is biometric. It is proven. You will be able to name every single person that has received those funds. So Nigerians can rest assured that this is an efficient and accountable way of providing relief to poor Nigerians.
The Secretary to the Government of the Federation, Senator George Akume, represented the President at the event, and he outlines other plans the administration has.
The government is working to develop and deploy several more solutions and interventions to help Nigerians of all walks of life. These include A, investment of 100 billion to purchase 3,000 units of 20-seater compressed natural gas powered vessels, investment of 200 billion naira to cultivate 500,000 hectares of farmland to improve food security.
A symbolic presentation of a 25,000 naira check is made to 5 beneficiaries drawn from different parts of the country.
A lot of data have been captured. This money is going to be transferred, not given by hand to an individual. So it could be traced.
This is a landmark achievement worth celebrating for the federal government, but many Nigerians are hoping to see how transparent the process will be, ensuring that those targeted for the scheme are the ones who will get the benefits at the end of the day. From the Presidential Villa, Emperor Simon, Channels Television News.
And it was an intense 7-day discussion as the International Monetary Fund and World Bank wrapped up annual meetings in Morocco on Sunday. Our very own Ini John McCall was there giving us a report, and she's back now, and she's back with me right here in the studio. Good morning.
Feels, I don't know, different to be on this side of
the... So, we did miss you. You know, right here in the studio.
You did? I thought you had enough of me. I mean, all the interviews and all of the reports.
Yeah, we had all of that, but we still missed you in the studio.
Okay, great.
And, nice. Just give a sense of, you know, your experience, you know, there.
Yeah, so I'll start with the serious stuff. Those were really serious conversations going on right there. And I tell you one thing that stands out. The whole world knows that these are troubled times. It's not just about Nigeria. It's not just about Africa. It's not about Europe. Everybody agrees these are trying times. And another agreement is that the worst is not over yet. Why? The world had to deal with COVID-19 pandemic. I think that was the beginning of this round of troubles. And just when we thought we're getting over that and economies were beginning to, you know, get rebuilt, then we saw the war in Ukraine. And you know, Ukraine and Russia are two major economies when it comes to food security. So that is really feeding in. Now we have the Israel and Hamas one. We're waiting a bit, but we're seeing what it's doing to oil prices. But I mean, when you talk about energy costs, food security, the world is getting hit by the impact from the war. Inflation is all-time high. And even in countries that we see inflation tapering, you know, like the US and all of that, there's still trouble brewing underwards because energy prices are still high. So what's the way forward? I mean, even we're talking of reforms, economic reforms, and it's general. Even institutions like the World Bank and IMF are getting knocked on the head that there is a need for reform, even reforming how they do their work, how they reach out to economies, how they provide funding, how they provide knowledge-based support to economies. And I think the Director General of World Trade Organization, Dr. Ngozi Okonjo-Iweala, captured it when she said the world needs to re-globalize. Some people or some countries were left behind during the first round of globalization. So it's time to do it again. And this time, don't just do it with your friends, in her words. It's time to do it with people you did not really consider your friends or you thought were not useful to you. For instance, the emerging economy, African countries mostly, they have the young population, they have the raw materials, you know. So it's time to capture these people into your net of you know, work, of trade, of reforms, and this is how the world can survive.
So I guess it's not a time for friendly and unfriendly nations alliance. Talk to me about, obviously, the issue about debt squeeze. And I know there was a lot of conversations about debt, and, African countries right now are reeling under a lot of debt. Some are already getting a debt kiss.
So the Secretary General of Commonwealth, she was the first person I spoke to who brought this up to say, so we say that African nations and emerging economies are reeling under the burden of debt. Have you taken time to check for the root of that debt? Country borrows money. They are so broke, or they cannot meet up with payments, and then they have surcharges. The surcharge policy of the IMF is adding between 1% and 5% to their debt burden. A country that cannot even meet up, with servicing of their debts. Now they have the surcharge of about 1% to 5% added to that. How are you helping those countries? And it is the poor economies that are actually facing this. The Western, the developed economies are not facing a whole lot of that. And so the World Bank president, Mr. Ejibanga, had said about how many percent of their financing goes to Africa. True word. But when you now include the surcharging policy on them, you are increasing the burden instead of helping them, and that's on the one hand. And the issue of debt cancellation came up. Georgieva Kristalina of IMF, managing director, had said, they have not even recovered from the $1 billion that they used for COVID. So issue of cancellation seems very far when it comes to the IMF at this time, because they have member countries who are also in trouble, and these are the guys who are supposed to, bring the funding. So I mean, where do you get the fund from?
But I think a country like Zambia actually got some kind of consideration.
Yes, they did. It's been in the pipeline for a long time, before they got it. Nigeria too is working on an interest-free loan of $1.5 billion with the World Bank. Well, the Minister of Finance said they hope it to come out soon, but we haven't gotten it yet. I know a lot of Nigerians have already gotten excited, but I guess the Minister of Finance, Mr. Idun, was also very quick to say that it's interest-free. Nigeria has qualified for that. Now, another thing about the issue of debt is, and Mr. Ejibanga said this, that you cannot develop. We talk about America, we talk about the UK. Did they develop on borrowing? This is a question Africa should ask.
Right.
We need to look inwards. We have the raw materials, we have the population, we have the brains. We have everything that they need. But because we are not handling it well, the developed countries, we talk about illegal mining, for instance, in Nigeria. Imagine if we had a solid mining sector. Do you know how much we can make? We don't need to borrow as Africans.
Because debt in itself is not a bad thing, but it depends on how you use that debt, and we've been lacking on use.
Obviously, so all the borrowings we've been doing are supposed to be for infrastructure. Can Nigerians come out to say the Nigerian government borrowed this at this time, and they've shown us this is the project they have used that for? So we need to look inwards. We need more transparency. We need more intentional borrowings, I guess, if we have to move forward.
All right, well, I guess we've touched on the major issues, that were discussed there. Now I want to ask you about the food in Marrakesh.
Oh, man.
Tell me about the food.
Oh, sorry. I hope there's no Moroccan watching this.
Right.
It was terrible for me.
Wow.
It was just bread.
Wow. Just bread.
Just hard bread. And it's not a normal bread. So that was
interesting meat.
meat with all the negatives that go with it,
Right.
And even when you had the meat, you didn't have a lot of salt, you didn't have a lot of pepper.
So I guess Morocco, they need to work on their food.
So you go to a restaurant and then you ask for food and they give you they're grilled and you don't taste any pepper. Come on, I'm a Nigerian, I use pepper.
How was the weather though? The
weather was harsh, like the northern parts of Nigeria, really harsh and all of that. But I have to tell you this. What I noticed in Marrakesh is there's the intention to build Marrakesh for tourism. They make billions of dollars from tourism, and they build their concept all around their culture. Very interesting. Even the logo, for the World Bank was one part of the emblem of their culture. So we don't throw away what we have. what we have, our culture, is what makes us different. And they've done very well on that. They ensure the roads are good. Their citizens are tourist conscious, so they know that, oh, this is a tourist and we need your money. So they treat you well. Do you get? And they call Marrakesh a city of luxury. Things are really expensive because they want you to come there and spend your money. But I tell you, they also create, oh, I forgot to bring like key holders and all those little things, which you can buy for like 5 dirhams and all of that. Now, in Nigeria, we have those things. But if you want to buy those things and you go to areas, they make it really expensive. So even tourists are discouraged.
Right.
You know, but in Marrakesh, they do those things with the consciousness that even with your little amount of money, you can get them. So it is tourist friendly.
So here we need to work on our tourism.
We have a lot to work on.
What I love about tourism is you don't have to deal with the issue of FDI, repatriation. They're bringing the money
Just
in
come
and they're
spend your money.
spending it right
I mean,
here.
I know how much I spent in 1 week in Marrakesh, and that has gone to their
Well, we'll
economy.
change some of that, whatever you brought back, and you give me all of that. Thank you so much.
Thank you,
John McQuarrie, giving us experience from Marrakesh. Thank you so much. It's great to have you back.
Thank you.
All right, let's take the conversation forward now. See, the federal government has launched a renewed hope conditional cash transfer for 15 million vulnerable Nigerian households. Meanwhile, the launch, which coincided with the World Poverty Eradication Day, took place at the Press Gallery, the State House in Abuja. Joining us now for that conversation is Mr. Paul Alaje, senior economist there at SBM Professionals. Great to have you on the show. Good morning.
Good morning, and thank you so very much for having me.
All right, Mr. Alaje, I believe it was Earl Nightingale that said the human race is fixed not to prevent the strong from winning, but to prevent the weak from losing. So we're seeing these cash transfers right now. It's a good move. And definitely all we're hoping for is that the right people, the real vulnerable people actually get these funds. How are you seeing it?
Well, I think it's a good move to support those that are really poor, those who are finding it difficult to live in the current global economic reality and the impact on Nigeria and the rest of Africa. The good thing about this is unlike what was obtainable before, where corruption held sway by physical hand-to-hand cash transfer, I've seen in Nigeria where we place our currency on table and ask people to come and collect. It becomes a very difficult thing for government and those in authority to verify who got what, when, and what is the method of receipt. From what we are hearing from the Ministry of Humanitarian Affairs, it appears that government have departed from the old ways, and we are seeing that the distribution of those government wants to support is now going to be through transfer, which means in the coming period, in the coming days, in the coming month, it becomes very easy for Nigerians who might be interested to audit and see how such money was disbursed, who got this money. We can also verify what is the living condition of those that had access to this money. The good news again is that even if those persons say they don't have bank accounts, recall that central bank is doing everything possible to expand the number of persons that are banked in Nigeria, and the evidence of which will be measurable in total number of people that have verifiable bank accounts using the BVN. It means for someone to be qualified, the person will have to be registered, and those with BVN in Nigeria will significantly expand. And we can know that even though government is trying to provide support for people, we are also increasing our banking penetration at the same time. And I think this is the way to go.
And definitely, we need to protect the vulnerable. But we also have the issue where it seems like the middle class has been wiped out, at this time. What do you think the government can do, about the middle class also?
The most significant class is the middle class. The middle class will serve as bridge between the poor and the rich. In Nigeria today, the middle class seems not to be in existence, and if they do, maybe 10% of the population. And if you follow the number carefully, World Bank reports released 26th of June or maybe 25th of June 2023 revealed that those that are living below the poverty line, not those that are living around poverty, but those that are living below the poverty line, according to the World Bank, were 89 million plus 4 million. And that will give you 93 million people. And the World Bank is projecting that if care is not taken, additional 7.1 million will join by December. We have just a few months to the end of the year, which is December. And I hope that authorities will do the needful. We also have less than 5% of our population that we might say that they are living averagely or prosperously. Then what do we do of over the remaining number of people? Their definition and classification becomes very confusing, because what you call the middle class in Nigeria may not be applicable. In fact, could be a prosperous person. What you call middle class abroad, I beg your pardon, could be tantamount to prosperous person in Nigeria. One, because of quality of money, that is the quality of Naira, because it determines everything. Also, the inflation that have decided to jump the roof. As I speak to you, inflation has decided to grow taller than Cocoa House in Ibadan, as is now over 26%. That means that even the middle class is getting eroded away. And where do you think they will join? Will they join the rich or they will join the poor? The answer is that rather than growing and joining the rich, more and more people are living being comfortable middle class to becoming poorer and poorer. And the projection, like I said, from one bank is that 7.1 million of such people might be joining the poor by the end of the year.
And I believe, poverty eradication would mean a collective approach, tackling a number of issues and adding conditional cash transfer. What do you think the government, should be looking at adding, even with the cash transfers?
Okay, cash transfer, conditional cash transfer are temporary measures to sustaining people or to making sure that people continue to live. The permanent solution will go beyond conditional cash transfer. It will be to encourage productive sector, one which will be evident in production, manufacturing, promoting plantation on our farms and our arable land. If you consider Nigerian land, the size of the entire country, we have 60% arable land. What is cultivated today on farming is less than 13%. What are we doing with the remainder? It's an answer, it's a question that must be answered to help our people out of penury, out of poverty, out of deprivation. It will go beyond supporting the poor, which I'm not saying we shouldn't do. I'm saying we should do that, but it should have timelines. The real solution will be when people are able to feed for themselves. And I can give you an example. China tried this method by providing conditional cash transfer to people. But China soon realized about 30 years ago that rather than people coming out of poverty, the burden was becoming more and more on government. Government therefore decided to say to lift people out of poverty, it is by creating wealth. It is by supporting viable production sector. You see, it was reported a number of years ago that China lifted over 200 million out of poverty in just 20 years. Average of 10 years, average of 10 million people were lifted a year. President Buhari also had this vision in 2019 when he said, with his administration and anyone that comes after him, we lift 100 million people out of poverty in 10 years. What we have seen, according to World Bank, what we have seen, according to UNDP, what we have seen, according to the National Bureau of Statistics, was that average of 5 million people were getting into poverty year after year when President Buhari was in office.
All right, let's talk about the Naira now. You did mention, strengthening the Naira. And recently, we know the CBN readmitted the 43 items to have access to the official, Forex window. Definitely, there was a lot of clamor for this, and now it's here. But it seems like there's some criticism going on right now about that. Talk to me now about the positives and the negatives about this readmission, and which one outweighs the other.
Okay, so readmission is a decision that central bank announced, I think, a week or thereabout ago. And the intention, in fact, the argument has been when you readmit these items back, if we really want to want to stop people or create order for people to having access to import into Nigeria, what we should have done would have been to put them on immigration list. And the argument again was that these 43 items are the reasons why we have a lot of pressure in the parallel market. That is, everybody that falls within these 43 items are the one that made Naira grew from 300 Naira to $1 parallel market in 2015, now to 1,000 plus at the parallel market. So the argument coming from those in support, perhaps in central bank and in other headquarters, is that by the time we remove it, everybody will come to official window. Now, my position is that that argument is very defective. I understand that there are positivity in it and that there are good intention that those that promoted it have in mind. But you see, economists go beyond economic theory. What you have seen is economic theory. But when you look at the applied economics, you see that what we have done has not been properly thought out correctly. Now, I will look at in 2015 when policy was made. Between 2015 to 2023, a number of persons, because of such policy, have promoted investment. Huge investment because of the policy. What happens to their investment? Again, it became relatively difficult for those who were operating in that sector and going to parallel markets to compete with those who were local manufacturers. For instance, those things still, for instance, those in what's it called now, tomato paste, and also those in rice production. Quite a number of them. Look at the list, including toothpick. What we are saying is that hard-earned dollars, extra dollars, should be used to support those who want to import toothpick, who want to import rice, who want to import iron steel, things that we can now produce in Nigeria into the country, simply because we want to play, we want to be the good boy of the world to the IMF, to the International Trade Organization, World Trade Organization, and so on and so forth. Now, the thing is, when we made this policy, what was the resultant effect? You saw over 80% reduction in supply side. The next work day at the what we call the FMBQ, which means we are just loading the demand side. We are saying that 43 more should join, whether it is parallel market or it is official rate, we are still loading the demand side. The solution, there are three more things I will say about this. The solution to the current quagmire or the current crisis we have in FX window has nothing to do with the 43 items. The truth is that what is actually fueling this parallel market demand, there are some of them. One, Nigerians who feel that they are losing value in their money. They have no business holding dollar, they just want to hold it. And central bank as well as other stakeholders, we must sit down as concerned Nigeria and think about way forward to boost confidence of Nigeria in holding the Naira. This is one primary thing that is responsible for over 30% of current demand in the parallel market. And I can ask you, Mr. Ladi, if I were to give you 1 million Naira and I give you an option of $1,000, to be sincere, which of these would you choose? To earn the money in Naira or to earn the money in dollars? $1,000 versus 1 million Naira. You don't need to answer. It's a rhetorical question. Even those in central bank today, they should carry out a survey and make them not know that it's a central bank that is doing it. What would they prefer? Have $1,000 or 1 million Naira? Confidence is everything about economy. People are losing confidence speedily. That is why those of us who are economic watchers, those of us who are seriously concerned about Nigeria's economy, we must do everything possible urgently. I mean urgently, to boost confidence of Nigeria in holding Naira, which is our primary currency. Unfortunately, there is nothing we can do about it. The more we postpone it and still concentrate on demand side, there are more issues. Who are the other people? Because what is fueling 60% are the things I want to say, not the 43 items. Number two, those who want to send their children abroad and they are holding the money today, they are converting Naira to dollar, waiting for the time their children will need to pay the next school fees and so on and so forth. I won't see how Naira devalue so speedily, even at official window. Number three, those who wants to travel out, quote and unquote, what we now call Japa in Nigeria. They started saving their money up just for them to leave Nigeria. And those who want to go and pay for their medical bills, among so many other things. You can carry out a survey. We have expert security in Nigeria. They can approach where these exchanges are happening. We have them in Zone 4. We have them on Harlem. We have them in Kano. We have them in Calabar. We have them in Sokoto. People who are undercover should go and investigate without just arresting people. That's not the first thing to do. We need to understand psychology of economics. Why are people always converting naira to the dollar? So when we know the real problem, and we are not chasing what the world is telling us is right, because we are unique in our ways. Our economy is unique. Then we can solve the problem. And I can tell you, all the things I mentioned connote over 60%, about 62% from SPM research, about 62% of what is fueling parallel market demand. And we need to solve this problem.
Okay.
How do we solve it? One is by confidence. Number two is by productivity. I wish I had more time. I would have explained some other things that has to do with the policy.
Thank you so much, Mr. Alaja. And I do agree with you. We need to boost confidence in the naira to create that demand for the naira, reduce the demand for the dollar. Thank you so much, Mr. Paul Alaja, Chief Economist, SPM Professionals. Thank you.
Thank you for having me.
All right, after the break, AFEX Commodities Market Update is next. Do stay with us. Welcome back for the AFEX summary now. We're seeing the last trading week. It was mixed performances across key indicators. Turnover fell by 0.3%, closing the week at 1.60 billion naira from 1.65 billion in the previous trading week, while numbers of volumes traded witnessed an increase of 0.05%. Number of deals traded dropped by 0.23%, closing at 95 from 124 in the last trading week. And the AFEX Commodities Index witnessed a decline of 0.01%, while the AFEX Export Index maintained at 229.25 points. To the volume of contracts traded now witnessed an increase in volume across sorghum and cashew. And across the export commodities, there we'll see paddy rice, soybean, sesame, ginger, wheat, and sorghum maintained at 456 naira, 377 naira, 1,247 naira, 440 naira, respectively. Other commodities witnessed the positive performances, with cocoa rising by 1.92% and closing at 2,133 naira, 64 kobo, and cashew nut. That rose 0.31%, closing at 588 naira, 19 kobo. Across grain commodities, we see maize had an increase about 3.35% and closed at 412 naira, 62 kobo per kilogram. For more now, you can visit the website there, AFEX, www.AFEX Africa Exchange for more details, africaexchange.com. Social media, AFEX Nigeria at Comics by AFEX for more details. All right, let's take the conversations forward now. See, as the central bank has lifted the foreign exchange Forex restriction on importation for 3 items as part of its commitment to boosting liquidity in the Forex market. While the removal will certainly impact the manufacturing sectors, it is also worthy of note that the commodities ecosystem is not left out, particularly with the removal of the rice ban. Joining us now for this is Yusuf Ogumbi, Head Sales Operation at AFEX. Great to have you on the program. Good morning.
Good morning. Good morning. Nice to be here.
So how do you anticipate this removal, affecting Nigeria's commodities market, particularly commodities such as paddy rice?
So the interesting thing is that the Nigerian commodities market is quite robust. The Nigerian market itself is quite robust, and you would see that typically the market has been operating for years and decades before this policy was implemented. So now that this policy has been lifted, the restriction has been lifted, you would see a number of dynamics shift, majorly looking at the import parity becoming quite important as you go into the coming seasons, the coming years, right? And typically what you would see participants, market participants begin to look at is, they begin to look at the cost of these commodities outside the country. Countries like Thailand, Vietnam become important at this point in time. They begin to look at the cost of commodities, the cost of logistics, and what will be the import parity at the end of the day? That's the question on everybody's mind right now. So for participants in the market, you begin to say, okay, if I want to import the commodity into the country, paddy rice, for instance, will it be cheaper than me buying it within the country? And this will become quite important. And don't forget, when this policy was implemented, you had the exchange rate at 360 naira, 363 naira, if I'm not mistaken. Now the exchange rate is 1,000 plus. So that means that you would see people compare these exchange rates. The cost of importing would also go up. And the dynamics across board will shift, basically. But then, very importantly, the exchange rate becomes important. The import parity also becomes important for participants evaluating this decision.
All right, we see local farmers have enjoyed, protective measures against imported competition due to restrictions. How the removal of these restrictions impacts their operations and competitiveness in the market?
So there are two sides to this coin, right? It's not just the CBN policy that has been responsible for the good seasons that the farmers in Nigeria have enjoyed. Basically, you are looking at strong, robust demand for commodities across board in the country. You are looking at a market where the population continues to grow, a median age of, say, around 19, 20 years. That means a population that consumes heavily. So that's a strong determinant of the robustness we've seen in the market over the past few years. So if you then layer on top of that the CBN policy, you then see some added advantage for farmers within the country. But now that this CBN policy has been removed, you still continue to see the robust growth in population and demand in the country, and that will continue to drive demand for commodities within the country. Again, the question is, will it be cheaper to bring in commodities into the country? As it stands, as of today, no, it isn't. And the participants will then begin to weigh these efforts, these factors to decide whether they want to import. Secondly, there are a lot of logistical and financial implications of importing into the country, some of which the participants in this market are not really accustomed with. So they would typically have that learning curve. They will have to build that understanding as to how they would deal with other markets, importing, raising LCs, getting dollars to import their commodities from other countries. And these will become important moving forward. So again, farmers in the country will continue to enjoy robust demand because of the underlying population growth we have. And then participants in the industry will also have a learning curve. So CBN policy or no CBN policy, restriction or not, you still continue to see that demand grow strong in the country.
All right, give us a sense of how this decision will impact government's goal of achieving, food security and self-sufficiency, and what adjustments might be necessary to ensure these objectives are still met.
So the interventions you've seen in the commodities market, whether you're talking about paddy, it's on multiple fronts. So you're looking at fiscal interventions. Of course, the monetary intervention that was applied by the CBN is what we are discussing here. You also still have the fiscal interventions, the tariffs, the interventions by the government, the amount of money the government has pumped into the economy. And I think the interventions will continue will stay because the government still has the intention of driving demand and food production domestically. So those interventions will stay. We haven't seen any commitments or any pronouncements on the tariffs, on the levies that have been imposed on these commodities. So those tariffs and levies still remain. So these things will continue to drive the production within the country. As per food security and food sufficiency, COVID has taught us that every country must make efforts to assure to be sure of food security and food self-sufficiency. You may not achieve 100%, but then to some degree you would still have to ensure that you are able to produce a good amount of what you consume. So again, there are multiple fronts to consider this. There's the fiscal side, there's the food security side, and I think the government is making strong efforts to ensure that food security continues to grow in the country. Food self-sufficiency, if we may not achieve 100%, we still achieve a good number of that, and the interventions will continue to play in the market, and these will continue to drive the government decisions, in my opinion.
All right, as a market leader now, how does this policy change and affect the trading dynamics and volumes on the exchange?
So again, like I said earlier, Nigeria is a very robust market. You are looking at over 200 million people as at the last count. You're looking at a very young population consuming. You're looking at a market that is well connected to other countries, Niger, Chad. As far as Sudan, people come into Nigeria to buy commodities. So it's a market that is quite robust, has the population to support its demand. And as a result, the operations will continue to run. It's not a situation where, I would like to mention that it's not a situation where you see demand dry up, no. You will continue to have demand going up as we have it in the country. Demand for production of grains in a country is roughly around 28 to 30 million metric tons. You will continue to see that grow as number of hectarage deployed to production continues to increase. So again, the Nigerian market is quite robust, to say the least, and the exchange will continue to benefit from those kind of fundamentals to drive the demand on the exchange. Again, you also see a lot of participants on the exchange enjoying the benefit of participating on an exchange. And then more and more of them are committing more volumes to be bought via the exchange as against what they used to do, because it guarantees you quality, quantity, and you are able to manage a lot of the formal processes that we're used to. The goal of the exchange is to formalize a lot of the informal processes we are exposed to, and that's something that benefits a lot of people in the country. Whether you're talking of farmers, you're talking of traders, you're talking of processors, benefits all and sundry. So basically the demand on the exchange is not expected to decline, it's expected to continue to increase, and the Nigerian market continues to remain robust as we have it, even getting more robust. So in my opinion, it's going to increase actually.
All right, we'll definitely keep tracking that. Thank you so much, Yusuf Ogumbi, Head, Sales and Operation at AFEX. Thank you so much.
Thank you very much.
Let's get a sense of what played out in the markets, and we have with us Ini again to bring us those details. Ini, great to have you. But we did speak to Ini earlier, and she gave us a lot of talk about the experience in Marrakesh, but she's definitely been tracking the market right here in Nigeria, from the fixed income market to the equities market, and she's going to bring us some of those details right here. Great to have you, Ini.
Yeah, thanks, Ladi. I don't know how I can be tracking the Nigerian markets from Morocco, but it's all fine.
You tracked it, definitely. I know you.
All right, so let's see what happened in the market yesterday. We see that the market was up almost 0.5%, 0.43%. Equities is at 36. We gained 158.34 billion, making our equities at 36.988. And the all-share index is at 51,595.66. The equity market looked to have recovered a bit, at least yesterday, but I know during the week, last week, I was actually following that, and so there were some drops down there. Now for the sectors, banking, the most liquid, is up unchanged. Consumer goods, how can consumer goods be unchanged when we know that we eat every day? And follow up with what's going on there. Industrial goods slightly up. Insurance, a little bit, I want to call them a new kid on the block, but that's not a very safe term. And then at least we have some movement for oil and gas. Let's see the next one right there. Positives for the activity chart. Let's go to the fixed income market, which is going to be our focus at the conference there. The issue of bonds was really top on the news. As we know, in a lot of developed world, we saw bond rise. The yields just went up right there. I don't think a lot of people were able to explain, what happened. Back here in Nigeria, we also had the state bonds and all of that. And obviously, this is how the federal government had said they were going to raise money, but we haven't seen a lot of movement right there. So, looking at the federal government bond there, we see that a total of 24 deals yesterday. And the June 2053, these are the long-term securities. They were very active yesterday, 12, especially for the 12-2053, and moved about 16.59 billion. For the market. Anyway, let's get Taiwo now join us and tell us some of those expectations. And if we expect more liquidity in the market, that could help us. Hi, Taiwo. Good morning.
Good morning.
Yeah, so...
Can you hear me?
Yes, I can hear you. I can hear you, Taiwo. So, I mean, in the developed world, we see a lot of positive movement in the bonds, and that, of course, is a detriment to the stock market. Tell us, with our own, are we seeing some of those positive movements affect us also?
Okay, thank you. So for the fixed income market, basically, we've seen yields rise up since the July bond auction. So consequently, month on month, we've seen yields elevated at every auction. We had a bond auction that was conducted on Monday with about 360 billion on offer, and the DMO was able to sell 334 billion of that. And we saw yields significantly move across the tenor. I mean, for the 2053s, the on-the-run bonds generally, which were those you showed earlier, the 29s, the 33s, the 38s, and the 53s. On the long end, which is the 53s, we saw it move from 16.25, where it closed the last auction, to 16.6. And we had similar movements across the yield curve. Following the bond auction market, I mean, demand in the bond space has been generally weak, even though liquidity opening yesterday was about 617 billion. So we just saw a pocket of trades across the on-the-run bonds, which are the 53s, 38s. And we saw the 53s that closed at 16.6 trade at about 16.58 yesterday. And throughout the week, I mean, we're expecting coupon payments to come in today, about 120 billion, and some other coupon payments will come in subsequently. And we expect that, I mean, this liquidity that would hit the market would see some demand in the bond space following this inflow of liquidity into the market.
All right, Taiwo, thank you so much for that expectation. We'll also be following up to see how that liquidity coming into the market is used. Thank you, Taiwo Lajibu, for your time this morning. All right, so it's back to you, Ladi. We're expecting some liquidity, and hopefully we'll see more movement by tomorrow or next, when we'll be looking at the market again.
Exactly. Thank you so much for that updating. And again, welcome from America.
Thank you.
All right, now let's take it on to London now. See, we have Juliana standing by right there. Great to have you. Juliana, we have some data. The Office of National Statistics says inflation is stuck about 6.7%. And we're seeing petrol prices going up, but food prices are dropping. But it seems like that headline inflation didn't beat expectation.
Yeah, that's right. Good morning, Laddie. The ONS data has revealed that, inflation in this country remains unchanged at 6.7%, which means that stopped 3 months of consecutive falls of pressure for households. So 6.7% may not be as high as some of the peaks that we saw early this year, late last year when it was in double digits, but certainly we are still feeling the cost of living pressures. If you couple this data with the data we received yesterday looking at the labour market, showing that wage growth is increasing, there are concerns that when the Bank of England Monetary Policy Committee do gather later this month, that perhaps there will be another hike from 5.25% to about 5.5%. Of course, we know the Bank of England are doing this to try and push down inflation, but the issue, of course, directly affects the millions of people on fixed-rate mortgages. We had data earlier this week, from Rightmove, the online housing register, showing that these hikes in interest rates are affecting the housing market. So, yeah, there are concerns that even though it's unchanged, no movement does mean that perhaps this will give a push for the Bank of England.
All right, we'll keep watching out for that. I keep telling you, Juliana, I'll take your 6% inflation any day. Thank you so much, Juliana. I'll catch you again at 1:30.
Talk to you later.
All right, now let's look at other markets now. Take a look at what's happening in crypto space. You see the color on the screen there. It's pockets of green and more red. That's what we're seeing right there. A lot of red on the board, which just this small green there with Bitcoin there holding on quite strong. And definitely, let's look at the sentiments in the market. We see it's still neutral, just like yesterday. 50 points. Investors not choosing one direction yet. It's either they're not bullish and they're not bearish. They're just right there in the middle. And despite a bear market, blockchain gaming has received over $2.3 billion as investment this year. Still, we're yet to see any tier blockchain game actually make it to that round. But let's talk to Solomon Amunde now, financial market analyst. Hello, Solomon. Great to have you. Good morning.
Good morning, Ladi. Good morning.
Yeah, so tell me, what can you say about this whole gaming and real-life use case for blockchain technology?
Yeah, so basically, gaming plays a huge role in terms of bringing in the next users into the blockchain ecosystem, because the gaming economy already has over $141 billion circulating within it, and it's also expected to grow to about $300 billion within 2028. So it's expected that the crypto ecosystem should be able to make use of gaming to capture at least 15% of that market value. So gaming will play a very, very huge role in bringing in the next stage of users into crypto.
And there's some investors looking at that industry. What do you think they know, that most traders don't know, that are looking at Web3 and gaming?
Yeah, investors, they have detailed information about the progress of most of these games. And sadly, most retail users, they don't look at statistics and data. It's the investors that are able to forecast to see what is expected from the market, and also they evaluate these markets based on the total addressable market, basically. So it's fair to say that investors have so much information that retail users don't have. For example, we have lots of games in the pipeline that have been building for over 2 years now. There are so many games, and most of them, they have a working product, but most retail users don't have this information. It's basically streamlined just for investors.
And what should we expect from Web3 games? Any top Web3 games we should know about?
Yeah, basically there are a few top Web3 games, like Big Time. Big Time launched about 2 weeks ago. Their token launched, and the game has been in development since second quarter of 2021, and it's a fantastic game out there. And we also have Axie Infinity. Axie Infinity has been around, we all know, for about 2-3 years now, and they've been doing very, very well. We have Star Atlas, we have Kauai Islands, and we still have so many others too in the pipeline that are still aggressively building.
All right, we'll keep watching that Web3 and gaming space in the crypto market. Thank you so much, Solomon Amunde, financial market analyst. Thank you.
Thank you very much, Ladi.
All right, so there we have it. Let's look at the top gainers for this morning. We see Ton there leading the chart there, $2.12, 8.52%. No double-digit gain. Bitcoin SV, that's $39.71, up 5.62%. Let's look at the top losers from this morning. We see SWE there, 37 cents. Top of the counter, 7.90%, down. Clayton, 12 cents. Down 6.24%, and Uniswap there, decentralized exchange, they're holding out at $3.89, down 4.71%. So that's how the market is looking, still neutral. Traders are not afraid and not bullish at the same time. So that's the wrap of the program today. Don't forget, join us at 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch us again on our YouTube channel. Just flip over to YouTube, search for Channel Television, click on videos. You can watch all our production. Thank you for watching. I'm Ladi Williams. Bye for now.